Ladies and gentlemen, if you own a physical therapist practice or any medical practice, OT, speech, podiatry, medical, you name it, you want to listen to this, okay, for just a second, especially if you have any bad contracts or you're worried about how much you pay your staff and you need to be able to pay them more because hospitals and others are, eating into and recruiting and taking people away, or you're just frustrated because here COVID's getting somewhat under control, right? Business is picking up and you're still not making the profit that you want to. Stay with me for just a few minutes because this is going to be useful and valuable. All right, we're going to break down a couple of things. So I've been having this conversation several times on a couple coming from a little bit different angles, but people getting really frustrated with things getting busy again and still not achieving the profit that they want. And what I want to take you through is just starting out really simply with an idea of a budget, starting with your profit, beginning with your profit. This is not the profit first formula or something from the book. This is much simpler than that. But if you have a target profit margin of 15%, and we're just going to start there, you can be higher, you can be whatever, but the average, I know the average among physical therapists among a broad swath is around 10.8% profit margin. If that's the average, understand there are people above that, right? And there are people below that, significantly below that. And I've been talking to a lot lately who are significantly below, trying to figure out what to do next. And I do want you to think about 10%. Greg Crabtree wrote the book called Simple Numbers and calls 10% the new break even. Because in essence, you've got other considerations, right? You've got emergencies, problems, things break, capital expenses, a deposit on a new lease or location, all those kinds of things come out of your profits. You've got to have some profit there to be able to do the things you want to do, even hire someone and then get them ramped up. That's an expenditure before you see any revenue. So we're going to operate off the premise that 10% is kind of break even. We want you to be at least 15%. Okay. And I want you to build $1 million business with a 15% margin or more, right? But let's start with the basics here. So if my cost per visit is $85, then I need a revenue per visit of $100 to achieve my 15%. Okay, that was really quick and might confuse you. My cost per visit, take all your expenses, download from your QuickBooks, get a report. If you have to email somebody and ask them for it and you don't have access immediately, oh my goodness, you've got to change that. All right, you need to have access to your numbers. They're your numbers. Right, so if your bookkeeper refuses to go to QuickBooks Online or use some kind of online bookkeeping software, or your accountant gives you a report once a month, whatever, no. You want access to that stuff. You want to be able to look at it, pull your own reports, and become a little bit financially literate. You don't have to master QuickBooks, but you need to have a couple reports and things you can pull out, like what were my expenses last month, okay? So you take all of your expenses and you divide them by the number of visits. That's your cost per visit. There's no other way. All right. I hear people talk about this and debate. And well, what are your expenses? Okay. We're not talking about owner draw or things that should be in the profit bucket. Okay. We're talking about legitimate operating expenses. Divide by the number of visits. That's your cost per visit. Now you've got a cost per visit number. The first thing I want you to do is look at your contracts. Okay. Any contracts, like in this scenario, our cost per visit is $85. If I've got contracts that pay me $68, okay, where's the other $17 coming from? You're paying it, right? You are literally paying and taking money out of your business, out of your pocket, out of your children and your spouse's pockets, okay, to pay for that person's healthcare. Doesn't sound like a good deal to me, okay? So we first want to make sure that you're getting at least your cost per visit to cover your expenses. Even that we don't like. We want, remember, 10% break even. We want our profit margin to be 15%. So in this scenario, we need $100 per visit. And you don't need to talk about payer mixes. And, when you're talking with other practice owners and stuff, and they're like, well, the payer mix, all that payer mix talk comes from the hospitals that are mandated by law to take indigent people and others, okay? So they have to take Medicaid, Medi-Cal, they have to take Medicare, they have to take whatever, anybody who can't afford it, they're mandated by law to take those things. And if there's a a bad government contract, they have to do that and they have to balance it out. And that's where all the payer mix talk comes from. You don't, I mean, you have a payer mix, but we don't want you taking some of those at a loss, okay, instead. And if you have issues with that, call me, we'll talk, because I got a lot more to say on that one. But let's go through here for a second and look at this. What I've done is broken down a couple other things. So we're going to have you look at, this is your full-time equivalent. FTEs is full-time equivalent, okay? PTs, we're going to go with physical therapists, but this applies to OT, speech, podiatrists, you name it. It's everybody in this group, your clinicians, and we're just going to use round numbers, okay? So these may not be your numbers. You might be 172 or 184 or 216 or whatever it is, but we're going to use $200 a visit, or 200 visits a month rather, $100 a visit. Your revenue generation per month per full-time equivalent. A full-time equivalent is somebody who's seeing the actual 200 visits, okay? Roughly 40 hours a week, you know, full schedule, they're busy, okay? If you have 2 of those therapists, then you multiply that by 2 and your revenue potential for your clinic is 40,000. If it's 3, it's 60. If it's 4, it's 80. If it's 4.5, it's 90, okay? This, by the way, this is your formula to get to $1 million, right? Because what's 90,000 times 12? 1.08 million. Okay, so in this scenario, this is your formula to get to $1 million. Now, if your revenue per visit is different, higher, and we'll go back to that, then you need fewer staff members. But we still want to preserve your profit margin, okay? So what we're going to do next is go down here. I'm just deleting those so we can see the rest of the screen, and do a scenario with 3 therapists, right? So what I've done here is I run into this a lot, okay? And if you're planning on having 4 therapists or something, don't plan your business around the 4 therapists, plan your budget around 3, okay? Or plan your budget around 2. And then when you hire more people and increase capacity, you're going to have a better profit scenario, okay? So what we've done here is my revenue is 100%, of course, because that's everything's got to come out of the 100% bucket. Can't have more. But my budget is $60,000, okay? Because I've got 3 therapists making $20,000 a piece. I took the 60 straight from here. I set my profit budget at 15%. That means I'm setting my profit target at $9,000. Okay, my overhead target is 20%. My overhead budget is $12,000, 20% of 60,000. That leaves me with a salary cap or personnel cap of 68% or 40,800. Everything, and this is your 3-bucket budget. Okay, that's pillar 3 in my 12 pillars, 3-bucket budget. You keep it super simple. You've got profit, you've got overhead. Overhead is everything that won't change when you hire someone or reduce staff. Okay, think about that for a second. Everything that won't change. So your rent, when you hire somebody, does your rent go up or down? No, it doesn't change, right? Your phone bill doesn't change. Utilities doesn't change. Okay, so all that stuff that doesn't change goes in your overhead bucket. Okay, and then you can figure out what your budget is from that. Because if you do that and you have a running clinic, you can calculate where you are right now. Okay, and 20% is pretty good. That's pretty aggressive. It's really, really well run. I've seen it. I've seen below 20%, but not a lot. Okay, and I've seen as high as 46. Right now, yeah, hopefully you went, ooh, right. If it's 46, and you know, I've got 54 for my personnel, I got nothing left over for profit. Okay, and that's not how the way we want to design it. We're going to start with profit and then work our way backwards. So this personnel, if the overhead is everything that doesn't change, then personnel is everything that does change. So it doesn't matter if it's work comp insurance or it's a software license or whatever. If you hire somebody and the expense goes up, we're going to put it in the personnel bucket. So yes, that means your billing percentage, all that stuff goes in the personnel bucket, because otherwise you'd be hiring billing staff, right? Okay, so what I want you to do, you're going to recreate this, okay? Whether you do it on Excel or Google Sheets or on a, you know, pen and paper, I don't care. What I want you to do though is run through and create something like this and start playing around with the numbers and look at it, okay? Then what I want you to do, and to do this with your current staffing, so don't do 3 therapists necessarily, do your revenue per visit, do your cost per visit, do, you know, however many staff you have, and then plug that in. But what I then want you to do is put in your actuals, okay, over here for the past 2 months. You're going to put in your actual revenue. Okay. And we're really close to target here. That's great. Right. But my profit is not where I want it to be. Okay, I budgeted 15%. I'm supposed to be making $9,000, and I lost 600, and I made 1,100. So I'm really at break even and maybe a loss. Okay, so my overhead though, I budgeted $12,000. My overhead 12,9, 11,9. I'm pretty close, right? So that's not where I'm going to spend a lot of my time. All right. What I'm going to do though is I'm way over budget by 20% or so for my 20%. I'm saying 48, 49, 40. Okay, I'm 8,000 or so dollars over budget for this month for my personnel. That's where all my profit went. Okay, and then here I'm about 5,000+ over budget for my personnel. Right, here we are. Even though I didn't hit, I made a little bit of a profit. And you'll see this when you look at your real numbers, your expenses will fluctuate. Something will get paid in this, office expenses or something, or supplies that didn't get paid this month. And you'll see it bounce around a little bit. So you're really looking for averages, and you're looking to be able to explain why. So if this is out of range, I then want to drill down and figure out why. If this is out of range, I then want to do a little bit more of an analysis. I want to pull out those reports. That's why you need access to your bookkeeping. Okay, so you can drill down and look at that. My favorite is to export it to Excel or to be looking at it in the software. Don't do a PDF. PDFs are useless for this stuff. Export it to the right format and use it that way. Okay, so what I want you to do though is think about these things and look at them and look at your business. This is not a good business design in that my target profit margin is not being met. Okay, and I'm spending too much on my personnel to achieve the goals that I want, right? So we want to go back and relook at this. Now, let's go forward though. Let's say you're in this predicament and you can't reduce salaries. And by the way, there are ways to decrease expenses, right? Reach out to me if you want a couple hints or connections and stuff. You can reduce some of your administrative expenses on benefits and retirement, on administration payroll. There are some things you can do, but we're not going to get an $8,000 savings, right? Or 20% reduction, and we're going to get a couple percentage points here and there. But those add up, right? If I can reduce my overhead by 1% and reduce my personnel bucket by 2 or 3%, that's 4%. And if I'm at -1, suddenly I'm 3% on the positive, right? Or if I'm at 2%, suddenly I'm at 5%. That's more than double my profit margin. So those aren't insignificant numbers, right? So I want you to think about that. Let's move into for therapists. Same clinic, same basis. And the reason I'm saying that, I want you to look at the overhead. We use the same overhead numbers. Remember, we hire a therapist, we hire staff, our overhead doesn't really change, right? It shouldn't. So now our overhead as a percentage budget, I've even raised it here because of our 12.9 and stuff, but it's much lower than it was. So actually, hang on, this should be 68.5. We caught that. I did not catch that review before. Okay, so and that's cool. So this should total 100. You see down here, whoops, when I'm on Excel, I see my sum. Okay, when I highlight the numbers, so I can look at this, I can look at this, and I've got my sum here. My sum should match that. That's how I do my reconciliations when I'm playing around with the numbers, okay? All right, so here we've got our same $100, $20,000 per therapist, 4 therapists, $80,000. We pulled that down here. That's our 100%. Our 15% margin gives us a budget of $12,000 for profit a month. Okay, our overhead didn't really change, so our percentage, it decreased. Okay. And this doesn't work. This is the same thing, 65%. So now we're really in trouble, right? Let's make sure that, yep, now we've got our 60,000. Okay, that's why we reconcile stuff. Okay, so here we go. We're going to be looking at this. This is our 80,000, right? Yep, down here, boom. Okay, so we've got our budget changed a little bit, but we went from 20 to 16.5. We also increased our personnel budget 65% to 68.5, okay, because our overhead decreased, not because our profit changed, all right? Not because our profit changed. So here we are, we're budgeted for $12,000 a month profit. We're not quite there, but we're a whole lot closer. Well, how do we do that? We're looking at these numbers. Let's say we're pulling our actuals after, with 4 therapists, right? We've still got the same overhead. Well, we've got a different personnel budget. Well, this has increased by almost $10,000 a month. Has that enough to hire another FTE, another full-time therapist? Yeah, $120,000 should be able, provided they're not 20, 25 years experience, including all the expenses that go with them. Okay, so people don't think about that. They're like, oh, wow, I could pay my therapist more. Wait. If you're paying them 85, you've still got a differential of 25 or 30% with all the benefits and health insurance and taxes and Social Security, the employer side of the taxes, all that stuff. So make sure you are comprehensive. If you're adding software licenses, if you're adding other, seat licenses, or if you're adding space, if you're buying equipment, any of that stuff, will go in this bucket as well. So, but what we've got here is we've designed our business to be much closer to where we want to be with 4 therapists. The problem is if we reduce our staff to 3 therapists, we're suddenly not making any money. Okay. So if you can hire somebody and you can get them busy, right, your overhead doesn't really change. So we're good on our budget for overhead. We're getting close for personnel, right? But as you can see, we're a little bit over. Well, every percentage point we're over here, takes out of our profit. Every percentage point we're under here, okay, our 15.4, here we added 1.1% back to our profit, right? But we took that away because we are 3% over here, right? So I want you to think about this and go back and look at it. And really, I want you to design it at 3 or whatever your kind of lowest number of potential employees is. And then it's going to look even better when you go up, okay? But let's look at that 3 for a second again and our revenue per visit. What if, we've done all this and we figured out, well, our cost per visit isn't really $85, it's more. But what if we could get a 3% gain in efficiency on our billing, our charges, and all that stuff, and our revenue per visit increased to 103? Did you see everything change? Okay, so now we're at a budget with our overhead, right? That's still at 20%, but our numbers shifted. Our profit went up $300 a month. Okay, or $270 a month. Our profit here went up $360 a month. $3, right? 4 therapists. And we look at our budget. Here's our budget. Here's our expenses. We're getting a whole lot closer, right? We're getting a whole lot closer with our numbers here as well, right? So our revenue goes up based off this. What if we were able to do 105? Boom, we're almost on budget down here now. Okay, so remember when you're trying to create a profit margin, you've got 2 ends of that spectrum, 2 things that you can change. You can change your revenue, okay? You can change your expenses. You try to push your expenses down as much as you can, right? And run frugally and efficiently. And you try to maximize your revenue, optimize rather, because we're not going to do anything that breaks the rules or isn't compliant or what have you. But you optimize your revenue and you make sure all the things are running efficiently. And I'm pretty sure, almost everybody I've talked to, we can get a 3 to 5% change. And then if there may be some things in the billing service that can change too, but just operationally, there are things you can do to change your revenue per visit by 5%, unless you're really, really running a tight ship, okay? And you'll see here in our scenario, right? Watch this line, okay? I'm gonna change this back to 100. We're skimming by with what we're called redlining, okay? If you're redlining the car, running it right at the edge, the engine's not gonna last very long, okay? And if we do this, even 5%, look, suddenly we're profitable. Not at our target yet, but that's a huge difference, a huge swing, just with a couple bucks a visit difference. And, these are all things we do with clients, all things we go through. There's some steps there, there's some work involved, okay? But if you need help or want help, let me know. That's what I'm here for. Reach out, and I hope to talk with you soon.